Good morning, welcome to CATEX TV. My name is Frank Fortunato. Today is Wednesday, November 14th, 2012. President Obama is beginning to reveal the outlines of his tax plans. He met yesterday with a group of labor leaders and business groups, and he's beginning to talk about $1.6 trillion in new revenue, all part of a means to avoid the impending fiscal cliff. According to the White House Press Secretary Jay Carney, the president is going to bring to the table a proposal for $1.6 trillion in new taxes on businesses and the wealthy as he begins discussion with congressional Republicans. This targeted revenue figure is twice the amount the president discussed with the Speaker, John Boehner, during debt talks in the summer of last year. Carney said that this figure, the $1.6 trillion, combined with $1.1 trillion in spending cuts already signed into law, would reduce deficits by $4 trillion. The president is going to speak in greater detail about this at a news conference later today at the White House. Well, if you're in Europe today, you know this already, but workers across the continent have launched an unprecedented string of strikes in a coordinated battle against austerity. The strikes are intended to paralyze factories and public sector offices. They've already grounded about 700 flights. Walkouts are occurring in Spain, Greece, Portugal, Italy, Belgium, Germany, France, and the United Kingdom. This is the first time that the unions have engaged in simultaneous strikes across the continent. Toyota is facing another recall, this time with their prized Prius product. 2.77 million vehicles around the world are being recalled for a water pump problem and a steering shaft defect that may result in faulty steering. 1.5 million are being recalled in Japan and 1.25 million abroad, including 670,000 in the U.S. Well, yesterday there was a conference in Bermuda. We really should have moved this story to the first bill. The leaders of three top Bermuda reinsurance companies gave their unique perspective on Hurricane Sandy. It's a story that we spotted in the Royal Gazette down in Hamilton, written by Marcia Breen. We're going to focus on David Cash's comments. He's the president and CEO of Endurance. Mr. Cash called Superstorm Sandy one of the biggest events in the insurance and reinsurance sector. He said three of the most interesting events the industry has ever seen all came within the last 12 years. He referenced the World Trade Center attack, Katrina, and then Superstorm Sandy. He said they're certainly tragic, of course, but what made them interesting is that these larger urban areas, they're just very challenging to insure. And once they are insured, they're equally challenging to reinsure. When you have a lot of very large risks. When a storm hits a location like this, it almost inevitably breaks the models. And so I think we're going to see something similar happen. He said the reality is this loss, Sandy, is going to go deeply into the excess and surplus lines market. It'll probably find its way to London, and then it'll find its way to layered reinsurance programs, and then may find its way into more complicated retro programs. So this, in a real way, has the potential to be as complicated for the reinsurance industry as did Katrina. He said, I think the most interesting thing here is not the fact that it has the potential to be unusual. He said, I think it has the potential to change the way insurers think about the northeastern U.S. He said, listen, it wasn't a hurricane at the time, so if a Category 0 hurricane can do that much damage when it hits the Northeast, and we think we're living in an environment where our climate is warming, can you imagine what a Category 2 could do, or a Category 3? So I am personally expecting a real change in the way insurance capacity is offered in the Northeast. I'm not sure we'd quite go through what Florida went through in '93 after Andrew, but I'm expecting a very significant withdrawal of capacity from that market as well. I will expect the change to be material. I really will. Man, is he correct. Nobody else is saying that. Everybody else is saying that the loss is manageable. It's not a capital event, but if you have been in New Jersey or New York or Southern Connecticut or Long Island, you know that this is a very, very serious event in the most densely populated part of the country. Mr. Cash is, I think, onto something here. Luca Albertini, our friend at Leadenhall Capital Partners, said that uncertainty around the eventual size of losses from Sandy is leading to a quieting of the insurance-linked securities market. He said the scope of the size of the storm and the uncertainty surrounding the amount of claims has really tamped things down right now. And to add fuel to the fire, Lloyd's insurer Catlin yesterday said that its New York office continues to remain closed following Sandy, and it does not know how much it will have to pay out to those affected by the storm. The firm said it would be some time before the true cost of the damage is assessed due to the sheer size of the storm and the many different types of claims it's created. Existing CAT models, Catlin said, are unlikely to predict the quantum of insured damage with a high degree of certainty. Kevin O'Donnell has been appointed President and Chief Global Underwriting Officer at RenRe. Mr. O'Donnell has been with RenRe since '96. Congratulations to him. Well, here's an interesting story. ACE and Aon have teamed up to try to sell flood insurance coverage to companies that have been hit by the Sandy floods. They are selling insurance to companies that just suffered from flooding as Sandy rolled across the Northeast. Businesses may find the offer quite compelling because of the way many commercial flood policies work. Flooding losses for each year are typically aggregated, meaning the cost of each flood claim erodes the amount of ongoing available coverage available to that business for the remainder of the year. So some companies may in fact look at this to purchase their, insurance coverage to reinsure their existing flood policy for the balance of the policy term year. Aon said that they're going to match the business insurance policies word for word. The facility is going to replace coverage for policies expiring between January and June of next year. Since the replacement coverage will only be for a few months, i.e. for the remaining life of the existing policy, it's likely going to cost less than normally. But Aon said the price of the coverage could vary widely. He said there's not one rate. He said because companies have just suffered from a loss, it's likely to be going to have a very hefty price tag. No kidding, especially in light of all the rethinking being done in the industry right now about the size of the claims that could occur in this area of the country. Well, we'll all be watching President Obama's press conference today, and then I'm sure there'll be a rejoinder from the Republicans on Capitol Hill. So maybe by this time tomorrow we'll have an outline of what's going to happen next. Don't bet on it. Thanks for watching, and we'll see you tomorrow.